Yo, what is going on, guys? Welcome back to the YouTube channel. If you've never seen me before, my name is Bernardo, and in this video I'm going to be showing you guys how I traded yesterday using my entry model. This is the, people call it the 10 a.m. PO3. I'm going to be breaking it down step by step here how I caught it. Yesterday's was a little different, so I'm going to show you a variation that you can also use. It's what I've been using to actually catch my trades. Yesterday's was a little different than normal, but I'll break that down as well. But it's all the same concept. Aligning a internal liquidity with external liquidity and mixing it in with other confluences as well, and how that works. So I'll show you that in this video using fair value gaps, draw on liquidity, change in state of delivery, and retest. This is what I'm going to be doing. I'm going to be breaking that down in this video. Now, I do trade live with my team every single morning. If you guys want to watch me and my team trade live every morning, we have a free Discord where we post every single trade as well, and we break it down step by step, whether win or loss. Loss, win, as y'all can see, win. This was the one from yesterday. We're going to be breaking it down in this video. And yeah, if you want to join, link is at the top of the description. Go ahead and join up there. We'll be doing a bunch of giveaways and stuff later on. So if you guys want to get some funded accounts in the future for free, join up. We might be doing some giveaways pretty soon. So join the link in the description and start hopping on there and talk to us. So other than that, let's go ahead and jump right into it. This is going to be a fairly short video. Make sure you stick along with it so you can help me increase my watch time as well. I'm trying to hit 1,000 subs on YouTube. We're almost at 500, so I appreciate anybody that subscribes. If this video helps you out in any single way, shape, or form. This is just how I trade. You don't have to trade this way, but I'm just going to break it down for you either way. All right, so yesterday in the market, I'm going to break it down like most people don't. I know a lot of people love seeing, at least me, I love seeing when someone breaks down their trade for me, how they open the charts. What are they looking for when they open the charts? I don't want to see skipping stuff like a Minecraft mining session, 8-hour mining session, and then they clip the video and then they're already done mining. They found 2 double chests of diamonds. Like, we're not trying to do that. What we're looking for, I know what you guys are looking for, is what am I looking for as soon as I open the charts. So I'm going to delete everything. As y'all can see, I'm just going to draw the lines of what day this was in so I remember, and we're going to go ahead and jump right into it. So put a vertical line here right at market open, and then put another vertical line right after that. Boom, right here. So 11:30, the trade was done by then in this window. So first thing I'm doing when I open the charts, I'm gonna go on the 4-hour time frame. So 4-hour time frame, what's happening on the 4-hour? Let me make it smaller. So once we on the 4-hour, why do I look at the 4-hour? I've made a bunch of videos on it, but basically on the 4-hour, I am looking for manipulation, I'm looking for direction, and I'm looking for exactly where the market is likely headed to next, right? The first thing I'm looking for is direction in the market. So where's the market going on the 4-hour? As we know, we were currently trending upwards on the 4-hour. But if we just zoom out a little more, we know that we were literally just crashing. So we've been crashing since literally like December. If I zoom out, so y'all can see, December was right here. And we've been crashing since then. And we started crashing even more since middle of February. So it's been a month now of straight crash. So what am I going to expect? Straight crash, right? I'm not going to be playing another trend here. Trend in the market currently is in the mini bear market, pretty much. We're just dumping every single day. Not a real bear market, but just we're dumping every single day. And that's what I'm looking at. So what I'm going to be looking for specifically is a piece of internal liquidity to get ran in through. So we already have identified my bias. So my bias for the day, bias identified, and that's going to be bearish most likely, right? So that's my bias. Now identify a higher time frame fair value gap, which is going to serve as internal liquidity, so we can then seek external liquidity, because if you know, the market likes to move from external to internal, internal to external, because that's just how a trend moves. Up, down, up, down, up, down. You typically won't see an uptrend moving like this, because then it won't be an uptrend, right? So external to external, external to external. That's not how it is. Usually you'll see an uptrend like this, right? So what are we doing here? We have external liquidity. It doesn't get taken out, but where is external liquidity getting taken out? Right here, right? We get taken out right there. This one gets taken out right there. This one gets taken out right there. And then what do we also see after that? Inside of that, actually. So we have internal liquidity, and what's getting taken out? Where is it getting taken out? Right here, right? Boom, boom, boom. Typically how trends move, right? If we're chopping, then this isn't really happening. But we know that once we're in a trend, typically we move like that. And what is happening on the 4-hour time frame? This to me looks like a big internal liquidity movement, right? We're going in. Overall trend is bearish on the higher time frame. You can even look at the weekly chart. The daily chart. What am I looking for next? Now that I've identified, oh, that's not what I want to do. Second thing, internal liquidity, aka an FVG, so a fair value gap. Typically internal liquidity lies within a fair value gap. So what am I going to look for? An hourly fair value gap. So drop down to the 1 hour. Dropping down to the 1 hour. When I drop down to the 1 hour, where's price currently at? We're sitting right here, and that is literally right up here. So we have this untapped fair value gap right here. Mark it out on the 1 hour. Again, why is this internal liquidity? Because this is in the inside portion of the range. It's not on the outsides. This is external liquidity. These are all orders, liquidation, money built up inside that hasn't been tapped into yet, right? So most likely thing to not is before the market continues going down, we're going to go up to get that money, right? Go up, get that money, fill the short orders, stop out the, fill the short orders, fill long orders that are going to get stopped out once we move down. And that's what we're doing. So identify that fair value gap. Then next thing I'm going to do, drop down to the 5 minute. We see we're tapping into the 1 hour already. So drop into the 5 minute next. Now we're looking at the 5 minute. In the 5 minute, what do we see? We tap into that hourly fair value gap. Now, typically here, I would look for a change in the state of delivery to the downside, meaning basically like a break of structure to the downside. But the problem here was price was way too big. If we measure this out, the change in state of delivery coming from here to the top high generated was over 100 points. And I'm just not going to have an over 100 point stop. I'll have a 100 point stop, but when it's this big and the market has already moved that much, just not highly probable, right? The smaller the stop in a big move, typically the more probable that it's likely to fill that move completely. In my opinion, 100 something point move isn't just too, I've taken 100 points, but 120 is kind of absurd. Kind of draw the line after 100, starts getting a little iffy. So what I went ahead and did this time, instead of just delivering off of the 1 hour on the 5 minute time frame, I identified more internal liquidity on the 5 minute. That way we can actually catch a proper move and then just size up with more contracts. What we did, identified this fair value gap right here. So we already saw price tap into this imbalance. We filled it. We respected it. We're starting to break structure to the downside, you know, making more lows, lower low, lower low, lower highs as well. Next thing we do, we generate this imbalance. Obviously, I want to see price fill it. But since it's a 5 minute imbalance, the 5 minute aligns with the 1 minute entry. We're going to go ahead and go into the 1 minute. I lost everything. Where are we at? We're right here. 1 minute entry. The 1 minute entry is going to go ahead and tap us in right here, right? We see it. And what do we get? So if I go in the 1 minute, so we tap into the fair value gap right here. I'm not entering just yet, just because we tapped into the fair value gap. I'm going to wait for price to tell me that we're more likely and we're ready to break back down and make that push down that I want. Because what is the first thing? If the market is going to go up, right, and we're currently going down, or actually right now, if the market is going to go down and we're currently going up, which is the case, currently going up, what is the first thing that needs to happen for trend to change to the opposite side? We need to break structure, aka either a break of structure, literally, or a change in the state of delivery, which changes, obviously, the state of which we are delivering from. So we wanted to be delivering bearishly. So what am I looking for? The last high to get put in, the highest high was right there. Where did that high deliver from? This body right there, right? So I want to get a candle close below that, and we end up getting it right there. I'm going to go ahead and set my entry right there, which I did yesterday. Boom. Set it up. That green candle taps us in. I personally set my stops above that high right there. and then I just took a 1 to 1.5 yesterday, targeting those data lows from 8:30 news. But as y'all can see, I mean, it ran up a bag to our but the only really low I wanted to take out was this one. So that's another key. Where do you think the market's going to be headed to? Another thing that sucked was we ended up retracing here because ES had taken out that low way before NQ did. So it started getting weak around this point. Finally hit it, and then we started retracing again, seeking more internal liquidity, right? Before making another push down, and we began to rally up like crazy. So yeah, that was pretty much the trade. We broke it down in the Discord. If you're already in the free Discord and you want to trade live with us, we have like a 7-day free trial for a little bit right now. If you guys want to trade live with us and you still haven't, so you can just trade live with us for a week and see how we do in the mornings. Today, personally, I didn't take a trade. Yesterday, this was the trade. It was an absolute banger. If you still haven't joined the free Discord, though, go ahead and join. Link is at the top of the description. If this video helped you out in any single way, shape, or form, please drop a like. It helps me out a lot. And subscribe to the channel. I'm about to hit 500 subs. Help me hit 1,000 next. I appreciate you guys watching this video, and I'll see you guys in the next one. Peace.